Hi guys, Tina Wilfred here. Good morning, good afternoon, good evening, depending on where you're watching this video from. Today we are going to be talking about break of structures. Alright. In the last video on the advanced playlist here on YouTube, we talked about market structure and we're able to cover the basic and the advanced market structures, right? And today we want to talk about the break of structures. Aside from the fact that this particular topic fell into the hierarchy, apart from the fact that it fell into the hierarchy of the topics we are supposed to handle on this advanced playlist, I'm also handling this most importantly because of the fact that a lot of people have difficulty with identifying proper break of structures, or let me put it, valid break of structures. I mean, everybody knows how to use their path tool to draw a break of structure. Everybody knows exactly how to identify it on the chart, but where the actual work lies on is identifying a valid break of structure. You see a lot of people mark break of structures, but sometimes it doesn't feel valid. I mean, structure is like the bedrock of everything you're doing as a trader. If you understand structure, I mean, 50% of your problem as a trader is already cancelled, if you ask me. And it's not even if you ask me, I think it's factual. Of course, it's factual. So that is why it's important that you should keep improving on your knowledge of break of structures. Everything I'm going to say today is definitely going to be based on my knowledge, the best of my knowledge about this particular topic, because we are in a market that we are always students to. Definitely, I'm going to keep improving on it, but everything I'm going to talk about today is going to be based on the information I've been able to gather through different sources as regards this particular topic. The topics we are going to cover under this break of structure is going to be the internal and external break of structures. We are going to be able to, identify that, and we're going to do that with a proper chart example. We're going to also talk about the major and minor break of structure. We are going to talk about the valid and invalid break of structure, where I will show you what a valid break of structure is to me and what an invalid break of structure is to me. And of course, we are going to talk about the market structure shift or the change of character, and also talk about how it relates to break of structure. Okay, it is not a topic under break of structure. I'm just trying to put it here because I also understood that a lot of people mistake market structure shift to break of structure. Okay, and some people call market structure shift change of character. So I also added it here so that we'll be able to talk about it, how they both relate to each other, maybe their differences. Okay, and I will also give a diagram example and of course a chart example if we're able to see that. But I'm sure that if you see the diagram, you will be able to see it or identify it on your actual chart. Everything we're going to do today, we are going to check out on the chart. Okay. So let's go ahead. We're going to start by defining what a break of structure is. A break of structure, as you already know, I want to believe that if you're on this advanced playlist, you already know at least basic definitions, all right? As you already know, occurs when price successfully breaks a previous swing high or a swing low, confirming that the
A
current
trend will
trend is
continue or
likely to
trend
change.
continuation.
In an uptrend, the break of structure happens when price breaks above previous higher highs. In a downtrend, break of structure happens when price breaks below the previous lower low. Just as you can see on this diagram here, you notice that price keeps breaking above the higher highs. This is a higher high. This is a higher high. This is equally a higher high. This one is a higher high. If price should pull back again, it's definitely going to break a higher high in a progressive uptrend. Okay, and this is what a break of structure looks like. Anything you can see here, of course, is a break of structure. I'm just marking this. I'm just trying to indicate the break. All right. So what you can see here is definitely what a break of structure. Let's not barely break of structure. Oh, okay. And we have the same for the bearish trend. Okay, you see that price kept breaking the previous lower lows, keeps breaking the previous lower low, keeps breaking the previous lower low. We're not going to waste so much time on this. I want to believe that you've been able to grab that. Okay, so a break of structure is a trend continuation signal showing that buyers or sellers are still in control. It is important that you note that because a break of structure continues price in the same direction, it is signaling to you that either the buyers or sellers are still in control. It's just as simple as that. So let's talk about the types of breakout structures. The types include, as you can see here, the internal and external breakout structure, the major and minor breakout structure, the valid and invalid breakout structures. Of course, we're just going to, run it through theoretically, and I'm going to show you what what they look like on the chart, okay, just for easy identification, all right. So first of all, the external breakout structure occurs when price breaks a major swing high or a major swing low. You're going to usually see this type of breakout structure on the higher time frame, like on the 4 hour time frame, on the daily time frame, weekly time frame, and on the monthly time frame. Okay, these are significant market highs and lows that are easily visible on the chart. They are so easy to identify on the chart. It usually confirms the continuation of the overall market trend. It usually confirms the continuation of the overall market trend. I'm going to show you that. Example, if price has been making higher highs and higher lows, when price breaks the previous major higher high, an external break of structure has simply occurred. Okay, just like, I wish I can even be showing this at the same time now. Oh, I want this to be very structured. Don't worry, we'll go into the chart when the time is right. Okay, so when price breaks a previous major higher high, an external break of structure has occurred. This type of break of structure carries stronger confirmation because it breaks a key structural level. Then we have the internal break of structure. An internal break of structure occurs within the larger trend. Okay, instead of breaking major swing points, price breaks smaller internal highs and lows. As opposed to the external break of structure, this very one occurs more in the lower time frame. Okay, remember we said that the other one happens more on the higher time frames, but you're going to see the internal break of structures more on the lower time frames, like the 1 hour time frame, 15 minutes, 30 minutes, 5 minutes. Anything you see there is an internal break of structure. And I'm still going to show you that. Okay, I pray that by the time we are done, that the video will not end up being long. Okay, it represents the smaller market movements inside the overall trend. So this internal break of structure is useful for refining your entries. Okay, it's useful for refining your entries, lower time frame analysis, finding continuation setups. Okay, let's assume you have a major setup on the higher time frame. If you want to keep finding continuations, okay, you're going to find them on the lower time frame. You're going to find them in the internal break of structures. Okay, this is the type of break of structure that allows you to trade the lower time frame easily. Okay, think of an internal break of structure as the market breathing, while the external break of structure represents the market's overall direction. I hope that is very clear. Okay, so let's talk about the major and minor break of structure. Oh, I just noticed that I made a mistake in the spelling here. Okay, so the major break of structure occurs when price breaks an important swing point that defines the higher time frame trend. So you see that they are actually very similar. When you hear internal and external, major and minor, they're just like similar. And I think people approach it like the same way. They just call it different names. Same way we have a lot of strategies as traders, but these strategies actually relate to themselves. They are actually similar to themselves. And that's exactly what this implies. Okay, same way you find the external break of structure on the higher time frame, that's the same way you're going to find the major break of structure on the higher time frame. The same thing for internal and what the minor breaks. All right, so it occurs when price breaks an important swing point that defines the higher time frame trend. The characteristics of this break major break of structure is strong confirmation. It is more reliable, usually seen on the higher time frames. It indicates institutional continuation. So you see that it's still the same thing. Whatever I have said for this is applicable to the external break of structure. Major, external. All right, they are the same. So you can call it major or external, or minor or internal. It's just as simple as that. So the minor break of structure occurs when price breaks a small swing within the trend. If you can, if you have actually been taking note from the beginning of the explanations or the definitions, you're going to see that it's just similar things. Okay, they are actually very similar. And the characteristics for this minor breakout structure, it happens frequently on the lower time frame. You know, there's a lot of breaks on the lower time frame. You don't need to be told. So it's seen mostly on the lower time frame. It is useful for entries, less significant than the major break construction. When we say less significant, that means it is less important. The major and the external break of structures, they are very important because that's what determines your directional bias. It indicates the general direction of the market. And these internal structures found on the lower time frame simply delivers price to the external break of structures, okay, on the higher time frame. It's just as simple as that. And that is why it's been noted here that it is less significant. It's not as if it is not important at all. Of course, I've already listed what they are used for. I've already listed their characteristics, okay. However, as compared to the other one, it is actually less significant. All right. So let's talk about the valid and invalid break of structure. This is where I used to have problem with a lot of people. A lot of people don't know how to identify what a valid and invalid break of structure is. Okay, not every break of structure is a true break of structure. It's as simple as that. A break of structure is considered valid when price clearly closes beyond the previous swing level. You need to note that down. It's not just closing, it needs to close with, a full body, not with the weak, not a weak break. It needs to close with a full body. The broken level is an actual swing high or swing low. It has to be. Okay, the move needs to come with, strong momentum. It has to. The candle closes beyond the level, not just the wick. I already said that. It has to close beyond that particular swing, not on the wick. The market continues in that direction after the break. Okay? The market continues in that direction after the break. Another thing you need to know about a valid break of structure, for a valid external, just like we said, we already said that we under break construction, we have the external and the internal, we have the major and the minor. Okay. Now, for a valid external, you're going to see like up to 2 to 3 break of structures in an external for you to consider it valid. I'm going to show you this is exactly what I'm going to show you on the chart. That's when I say chart example, that's exactly what I'm going to indicate for you. A major break of structure needs to contain at least up to 3 break of structure inside it. Okay, and those break of structures are what you call what? The externals. Sorry, the internal break of structures. Okay, it's just as simple as that. So I'm going to also show you that on the chart. The external break of structure, for it to be valid, you need to at least find up to 3 break of structures inside of it. And the internal break of structures, for you to actually consider it valid, you need to see some sort of structural liquidity inside of it. There are also, small, small breaks into it that you can call the minor break of structures as well. I mean, inside the internal break of structures, you can actually see minor, minor breaks inside of it. You can call them the structural liquidities, or you can call them the minor break of structures because they're quite minor, okay, very small, very small. And that is where the small difference between the internal and the minor comes in. All right, it's just as simple as that. So for you to know an invalid break of structure, an invalid break of structure is a false break. Okay, is a false breakout. Price appears to break structure but quickly returns inside the previous range. And how you're going to be able to identify this is that only the weak breaks the structure. No candle close beyond the level. Weak momentum. There's no strong momentum that price is coming with. You have to pay attention to things like this. Price immediately reverses. Okay, this is commonly called a fake breakout or liquidity grab. I'm sure you have seen something like that before. So we've been able to cover the meanings of this internal and external, major and minor, valid and invalid break of structure. Let us now talk about the market structure shift or the change of character, which is also known as the MSS slash the CHOCH. Some people call it CHOCH. Yes. I don't know if that works. I've also seen people call it CHOC. So whichever one you can call it out, but that's the abbreviation for it. So let's talk about it. Okay. Now the truth is that there are actually similarities. Sorry, a lot of people tend to mistake this market structure shift to break of structure. Okay. So before we even talk about the change of character, which is actually the same thing with this market structure shift, I want us to talk about how I want us to actually compare rather this market structure shift with break of structure. And because I've already prepared something like that last night, but I don't want us to take much time trying to, differentiate and all of that. I don't want us to take that kind of time. Okay. So we are going to use this diagram here to show what we are going to show, to do what we are going to do, all right? So I'm sure you can see this very diagram clearly. I'm sure you can see it. I'll be right back. Let me go on a little break. All right, welcome back. So let's continue. I'm sure you can see the diagram very clearly. If you're already familiar with this, I don't need to explain too much. But now the question is BOS, that is the break of structure, is it the same as the MSS or market structure shift? The answer is no, they're not the same. Okay. The only time people are able to differentiate it is when they hear something like change of character. But most times, when you tell them in terms of confirmation, when you tell somebody, oh, for you to confirm this trade you want to get into, you should wait for a market structure shift on the lower time frame, maybe 5 minutes or 15 minutes. Why? Because price is fractal, right? So when you tell people something like that, they assume that it's a break of structure that they're saying, no, it's not a break of structure. Once that particular shift occurs against the normal trend, it is not a break of structure anymore. That is actually the same thing as change of character. Okay. And that is what the person clearly means when the person says wait for a market structure shift on the lower time frame. All right. So they are not the same thing. They look related, but they are not the same. In fact, they are related, but they are not the same. So a break of structure actually indicates trend, okay, in the same direction. It indicates trend continuation. We are trying to compare now. While a market structure shift indicates a possible trend reversal. Okay. Just for instance, as you can see here, we kept having a break in this bullish trend. We kept having a break above the previous higher highs, break above the previous higher highs, break above, and then suddenly there was what? There was this, like, serious, I don't know if I should call it pullback now, that broke this particular level that price has been respecting all along. It just breaks it, signaling a change in direction, signaling a possible trend reversal. It has disrupted this particular order flow. We are going to talk about order flow next in this class. I don't know if the liquidity class is coming before it or the order flow class, but we are going to talk about it. Once this thing happens, there's already a disruption in order flow, because order flow simply indicates price moving in the same direction without interruption. Don't worry, we'll talk about that in the next class. Okay, I don't want to carry you too fast. All right. So the moment this happens, there's already a disruption in order flow. And that is what you call a market structure shift. Okay. The same thing you can see for the bearish trend. Price kept breaking lower lows, lower lows, lower lows, and then suddenly it just disrupted the move and broke the high that it has been respecting all along. And that is what a market structure shift simply indicates or implies rather. So a break of structure breaks in the direction of the existing trend, while a market structure shift breaks against the existing trend. As you can see here, it broke against the existing trend. All right. The break of structure confirms buyers and sellers are still dominant, whereas a market structure shift suggests control is shifting to the opposite side of the market. As this thing is moving, 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 and suddenly there is a disruption of order flow right here. Okay, you can just say that they are trying to the control is gradually trying to shift. Okay, now in something like advanced market structure, we learned that once this happens, there's going to be another break, you understand, to the upside to indicate that, oh, true, true. Because sometimes price can actually do this and it's just a false change of character and it will go back. I don't know if you understand. If you have been on your chart, you know when this thing, it happens a lot. price can actually do this and then it will still continue in the same trend. So that's why in the advanced market structure, we learned something like waiting for a confirmation, and the confirmation is a second break of structure. But that's not what we are here to talk about. We are not here to repeat lectures, all right? So a break of structure usually comes after the trend has already been established, whereas a market structure shift usually appears at the beginning of a new trend. Okay, it's just as simple as that. Just as simple as that. There's nothing we are coming to talk about under this, and I want to believe that the few points I have raised about these two or on these two is enough for you to be able to distinguish it. Now let's talk about change of character, which is actually similar to market structure shifts, or let's say they're the same. Okay, similar in meaning, it still means the same thing. Okay, so just different name, but they are just similar. All right, a change of character is the first warning that the market might be changing direction. Okay, it occurs when price breaks the most recent swing against the current trend, just like you can see here. It broke the most recent swing. This is it. It broke the most recent swing. This is it. Okay, right. That is it. So, as you can see, the example is here looking at you. As price is making higher highs, higher low, higher high, higher low. If price now breaks below the higher low, that is a change of character or market structure shift. As you are here, if you are the type that uses change of character, let this be somewhere in your head that is the same thing with my market structure shift. And if you are the one that uses market structure shift, let this be somewhere registered in your head that it is also what? Change of character. It tells traders that buyers may be losing control or sellers may be taking over. However, change of character does not guarantee a reversal. Okay, I already said this. Traders usually wait for confirmation, a retest, or another break of structure in the same direction. This direction that has been established, price needs to give another kind of break to confirm it. Okay. The key takeaways for this particular class, we already established that a break of structure is or simply implies trend continuation. A market structure shift or change of character is a possible trend reversal. External break of structure breaks major swing points. Internal break of structures breaks smaller swing points within the trend. A major break of structure is stronger and more reliable than the minor break of structure. We already talked about significance, if you can remember. A valid break of structure requires a decisive candle close beyond the true swing level with momentum, whereas an invalid break of structure is usually just a liquidity grab or fake breakout. A change of character the early warning the early warning. Break of structure confirms continuation, or after a change of character confirms what? A new trend. So a break of structure actually does two jobs in this thing now. You see, it actually continues price in the same direction. It confirms the same direction. And at the same time, whenever a church or a market structure shift occurs, a break of structure is used to also a break of structure is used to confirm the new trend. A break of structure is simply used to confirm that new trend. This is what I mean. I don't know if I need to draw. I have to. Okay. So you see, we got another break to this upside. That tells you that, oh, this particular move is serious. So do you get? It actually confirms it. All right. So a break of structure tells you the current trend is still healthy, whereas a market structure shift or a change of character tells you the current trend may be getting sick. Okay. A break of structure in the opposite direction after a change of character confirms the market has likely changed direction. This is exactly what I'm trying to say. So once you see something like this, after a change of character and price breaks again to the upside, that's a confirmation that this change in direction is like it is serious. So I don't even understand. So it's just as simple as that, all right? So we are going to dive into the chart example of everything we have talked about. We are not going to waste so much time on that. I'm just going to show you. Okay, I didn't want to disrupt the flow of the lesson. That's why I was not showing you examples at the same time. But now let's get right into it. Let's have a short break and we'll be right back. All right, welcome back, guys. So let's quickly run through the charts so that you can see the chart example of everything that we have talked about. So because GBPJPY has been on an uptrend for the longest time, I'm going to use GBPJPY to actually show you the uptrend. And then for a while now, gold or XAUUSD has been on a downtrend, not like generally on a downtrend. Of course, the current price action is reacting from a daily demand zone, but then it's been selling temporarily for a while now. Okay, so I'm going to use this to show you the downtrend example. Okay, on break of structures. So because we are here already, let's start with the downtrend. Start with the downtrend because we are here already. We can also find the uptrend. Oh, there's even an uptrend here that we can use. Oh, wonderful. Everything is here. So let's start with the uptrend rather. All right. So here is it. Like we said, in an uptrend, price will be breaking the higher highs progressively. All right. As you can see, price is breaking the higher highs. I'll try as much as I can to make this one a very short one. Price breaking the higher highs, higher highs. All right. So you can see this is what an uptrend looks like. Okay. You can see the clear break of structures. I don't need to do too much again because of course you can see. And then suddenly there was what? There was a change, there was a disruption of order flow, the uptrend was interrupted. I'm so happy that this particular instance is giving us everything that we want, both the market structure shift, the break of structure. So we're just going to do everything on this gold pair today, all right? So you can see that as we are progressing for this uptrend, price was buying progressively, right? You can see the break of structures, and then suddenly there was a disruption. Let's indicate the disruption, which is the market structure shift. There was a disruption, as you can see here. All right, this is the lowest low here. All right. So after the disruption, what did we start getting? We started getting an or sorry, a downtrend, just like we said. I hope you can still remember everything we talked about, right? The moment there is a disruption, the moment there is a change of character, the moment there is a market structure shift, it already indicates a possible change in trend. Okay, it already indicates a reversal in trend, and there are chances that that particular pair would change direction to the opposite side, as you can see here. This is a 4 hour time frame. If you go to a 1 hour time frame to confirm this move, you're going to see that after the change of character, there was a break of structure to confirm the move. Okay, just as we said in advanced market structure, but just not to add so much details. So you see that price now continued what? Continued selling, kept breaking lower lows and lower highs, right? Sorry, kept breaking lower lows rather. So yeah, okay, we got another break here. We got another one here. We got another one. All right, so it just kept happening that way. Oh, I'm sorry. It kept happening that way, even to this very last break here. You can see there's another break down here. There's another break down here. Okay, now this is another one. I want us to keep doing it till we get to this point that my current price action is, where my position to is. Price literally broke this low again. After it broke this low, there was no proper break here, because I mean here there was no proper break here because it didn't break with a full body candle. All right, so price went ahead and created a little high here, and then it failed to break this plate. This is what we call a failure swing. Okay, if it failed to break this low, instead of it to break this low, it now went and broke the lower high. Are you seeing it? Signaling another change in direction. This is another market structure shift on the 4 hour time frame. Are you seeing it? And because it is signaling a potential change in trend, what did I do? I placed my position to, because it left an order block. It left an order block around here. Price left an order block around here when it was going up to create this market structure shift. So I waited for it, all right? I waited for it and then tapped into this level, and price respected that level. So currently I am hoping to, start buying it up. I'm hoping the price will, create another higher high. It has created one here to signal a potential change. If price can give me another higher high, give me another break to the upside, that is breaking this particular high here, that is all I need for us to continue backwards on an uptrend. I want to believe that this was clear, so I was able to explain both the uptrend, the market structure shift, and the downtrend in this one example, or in this one chart rather, because I wanted to use the two different charts to do it. All right, so that is it. Now, the next thing we talk about is the external breaks. Already, these are external breaks because we are on the 4 hour. Remember what we said about external breaks or major break of structures? You find them on your higher time frame, like the 4 hour time frame, the daily time frame, the weekly time frame, the monthly time frame. All right. So, in all of these break of structures, there are internal structures inside them. There are internal structure inside each and every one of these. So this is already an external break of structure, okay? And for a valid external break of structure, you need to at least see up to 2 or 3 internal structures inside of it. And you can only ascertain this by going to your lower time frame. Of course, your internal structures are found in the lower time frame. All right. So you go from 1 hour, 15, 5 minutes, 1 minute. Oh, forget about 1 minute. You will see your what? Your internal structures right inside these external or major structures. All right. It's just that simple. So I don't think I need to draw any other thing here. All we need to do is to actually go and find the internals on the lower time frame, the internals that are inside it on the lower time frame. Remember, I said for a valid external, it needs like up to 2 or 3 break of structures, internal break of structures, underline that internal break of structures for you to consider it what a valid external. All right. Now, we also talked about valid and invalid break of structures. You can see that each and every of these structure breaks came with a proper body break. There was no weak break. And even where a break on the week wanted to occur, you see that I did not entertain that. I noticed that there was a failure swing. He failed it's not even a failure swing. This is a rejection because there are actually 3 types of trend change. We have the rejection, we have the failure swing, we have the expansion. So this is actually the rejection type because it actually took out this low, but it didn't take it out with the body of the candle. That is just the difference. So you notice that because it broke with the wick, we did not count this as a valid break of structure. Instead, we switched it towards a change of character or a market structure shift. So it's just that self-explanatory. So for the internal break of structures, we are going to mark the internal break of structures and also talk about the valid internal, how you identify a valid internal break of structure. So like I said, you're going to find for each and every of the external structures, you're going to see what? You're going to find your internals, at least 2 to 3 internals in each and every one of them. Now, this is example. You can see this break from here to here. You can see this break. How many break of structures can you find inside this one break? Let us count. I will try to change the color. I'll try to change the color. So this is these are the internals. You see that we got a break inside here. We got a break inside here. Okay, we got another break. We got another break. Okay, we got up to 3 internal break of structures inside this one move. When you want to count the internals in an external, you're going to actually count from the right hand side. Okay, you're going to count from the hand side for an uptrend. Okay, for an uptrend. This is an uptrend. Let me even be sure. Right, for an uptrend. This is signal. This is where we had that change of character. So you're going to count, but if it is like for a downtrend, which is somewhere from here. Oh, I also think it's the same thing though. If you want to count the internals on this level now, you're still going to count from the right hand side. Okay, whichever one that works for you. Just shall know that there are several breaks that makes up an external. Okay, there are several breaks, so we are going to count on this one too. Of course, you've seen that one. So there's a break here. This one is for a downtrend now. See, we have several breaks. We have several breaks, as you can see. We have this, we have this. So two or more structures will always make up an external break of structure. And for you to have a valid internal, I'm supposed to change the color. The color of this, I'm supposed to change it so that it will be very much more. Okay, let's change it to blue. Okay, so you are seeing the internals inside the external. This is a full external. The purple line is a full external, and then you can see the internals inside of it. How many internals can you count for this particular external? That is one, two, three, four. And then for this uptrend here, for this little uptrend here, how many? This is the little uptrend here. It is also an external. How many break of structures or internal break of structures can you find inside of it? We have one, two, three. Okay, we didn't have a break around here. So you see that that's like, let me also change this. Oh my god. Let me change the color to blue again for us to indicate. So now I also said something like a valid internal. For you to know a valid internal, there is supposed to be, some sort of liquidity inside of it or minor breaks inside of it. Although I made you to understand that the internal breaks and the minor breaks are the same because you find the both of them on the lower time frame, while the major break and the external break are also the same because you find them on the higher time frame. So inside every internal structure, there are also minor breaks that make up those structures, and those minor breaks are actually structural liquidity. So one of the ways you ascertain that your internal structure is okay is when what? Is when there are actually structural liquidity inside of it. There are a lot of people that come, they'll be marking the structural liquidity and we'll call it a break. They're marking structural liquidity. I think we will see those structural liquidities more on the 5 minutes time frame. Let me try. So hard to it's so hard to want to get it. That's why I don't really like to go on the 5 minutes time frame. To take us time. Oh, let's so I think you should understand what I'm trying to say. When I mean structural liquidity, let me zoom in so that you understand. Let me zoom in because in every of this internal structure you are seeing, there are actually liquidities that made up that particular structure. See, as you can see, this is a structural liquidity. You're seeing all of these small candles that make them up. Those things are liquidities. Okay, look at it. These are liquidities. Everything you are seeing here, you can see my cursor. Those are structural liquidities, and sometimes they make up one small tiny, break. If you are actually trying to take a trade now and you got your entry from the higher time frame, you need to come down to the lower time frame to find a better entry. It's usually like that minor break that happens, that like minor um MSS, like minor market structure shift that might occur, and you can use it as your what? As your fast entry, thereby still maintaining the same entry on the 4 hour time frame or whatever higher time frame you got your entry from. Why? Because price is fractal. It literally repeated itself on that with that minor break on the lower time frame. I don't know. I hope this was like understandable. So we just talked about the valid internals. We talked about the valid externals. For the valid externals, I just made you understand that a valid external is supposed to have several breaks inside of it, several internal breaks on the line inside of it, and then a valid internal is supposed to have like um some sort of minor structures inside of it or structural liquidities that make up that particular one. So I see a lot of people, they don't see small break that is looking like a structural liquidity, or they see one small and they will call it full break of structure. It doesn't happen that way. That's why price will always come and take you out. I think I even have a few examples. I've seen it happen a lot of times. A lot of times you just see small breaks. Just look at inside here now, you can see that there are actually small breaks. You will see somebody will regard it as a proper break of structure. That is why you need to pay attention to this break of structure class, because you may think you understand it, but you don't get it. You don't get the full picture. You still find yourself making silly mistakes when marking your structures. And if you don't get your structures right, best believe that anything you are doing on the chart is rubbish. You are doing rubbish because price will likely be taking you out, and you'll be wondering why. You're wondering why price is sweeping you. That is the reason why. That is the reason why. If you pair what we have just learned with what we learned on the last class about basic and advanced market structure, you see they're actually related to each other too. Okay, they're actually very well related, and you need that particular class to understand this, or you need this to be able to understand that one, whichever one that works for you. But that is all for this class. This is the chart example of everything we have talked about. I've been able to put you through all the chart examples of everything that you need to know. Thank goodness we found everything on one pair, and you can actually decide to watch this more times to be able to grasp it. Just in case you have any question, maybe I forgot to add something on this video and you feel like you're confused about something that I said, I will be happy to answer your question. Just drop it on the comment section and you will definitely get my reply. If it's something that I need to reply with another proper, maybe short video or something, of course, trust me to do that for you. And based on that, I think we are done with this particular topic. Okay, we are completely done with this topic. The best way you can support me is just to subscribe to this channel. Don't forget to like, don't forget to comment, don't forget to share with your friends who are struggling with structure. Trust me, you don't know this structure very well. Oh. You don't know it well. Until you need to give it a good like attention and screen time for you to really understand what structure is all about. And once you get it right, you have already solved like over, or let's say, let's be fair, 50% of the problem while trading. So that should be all for now, guys. Thank you so much for sticking by. Like I said, don't forget to subscribe, like, share, and comment. Okay. And see you on the next one. Bye.